All right, hello and welcome, traders. It is Friday, April 4th, 2025. All right, what a week this has been. The whole tariff tantrum really took off this week. So we were expecting, oh, maybe we'll get these 20% across the board or 10% or reciprocals. But what we got was just an absolute craziness of tariffs across the board, some pretty doggone steep out there. Not saying it's not warranted, not saying it's not good for the economy and such in the whole. All I know is it's not good for the stock market right now, and it sent things reeling. So we were actually looking pretty good till Trump pulled out that little board with all the tariffs on them, and that was sticker shock for everybody in the market. And then today, you're starting to hear some retaliation back, which is what you expected from some of these people like China and whomever. But then you've got some countries like Panama, I think, and Vietnam and others that are, hey, we're willing to talk and negotiate, which is exactly the ploy from the commander in chief there. So it's exactly what he's looking to do. We'll see, but the markets didn't like this stuff at all. And we had 2 days of just massive selling here. So announcements came out on Wednesday. Immediately, the futures tanked in the after hours. They just kept going down yesterday, and then they went down even worse today. So big down days, two of the worst days trading in the market. Huge vol spikes. We saw VIX, in the 40s. We even ended the day at 45. So VIX is extraordinarily elevated. So if you think back to what was the last big event? Well, that was Volmageddon back in August with the carry trade incident with Japan. Well, this was about the exact same amount of problems that it caused. It just was, some big spikes in the after hours, wide strikes, hard to get in and out of. People saw things hitting stop losses, especially on futures. They started getting out early, but it did not stop when the market opened, unlike August 5th, where things kind of reverted pretty doggone quickly. This did not. We just kept selling off during the day. So let's take a quick look at the charts and let's see what's going on here. You could see this gigantic red. I mean, to say that this is a bearish engulfing candle would be an understatement. That is the candle of all candles right there. If you think back here to August 5th, that week, I mean, wick down, finished higher. Okay, this just absolutely crushing the market. You would have to go some time back to see anything, well, this horrific in the markets. I think yesterday was the second largest uh, day ever, down day ever, and today would be, I think, number one. I'm going to take a look at, let's just look at the uh, daily chart. Which one do I want here? I think this is what I'm looking for. Okay, not exactly. I have too many different charts here. Day trade, daily indicators. Let's get one more here. Sorry about this. Yeah, the daily chart. I don't know how I missed it, but it's all good. So here's the daily chart. Let's get this to a 1 day reading. Let's look at ES here. Let's get this thing where we can see you're not finding these big red candles to this size. We got to go back here to 2024. We got to go back further. We got to go back almost into COVID uh, time frames back here, and you still in COVID didn't see anything of this magnitude. So, there's your COVID lows, which wasn't fun at all, but heck, you went down from 38, 3,900 to, uh, 2,100. So pretty good drop right there. So yeah, 30, I'm sorry, 33, 3,400-ish uh, down to about 2,100. So 1,200 points drop there, but this current move, massive in scale for just the individual days. It's all, I mean, it is what it is. you hopefully have a trade plan and you follow it. If your trade plan has stop losses, I hope you guys adhered to those and you stopped out. I certainly did today. So at least today, we were able to get out. We did take some losses, maybe a little bit bigger than normal, but I also took off some things that were smaller. I actually took advantage of this to clean out the account a bit. Not scrapping everything, not running, starting over. Just took the chance of, you know what, if we continue this, and we closed very near the low, so we could see more pain coming. If you're looking at the weekly chart here, okay, you're just starting to get oversold, okay, but the momentum is down, so it's going to take a little bit of doing to reverse this momentum. Doesn't mean we can't reverse this momentum, but we came down to those August 5th lows right here, and that's pretty much where we halted. So we have now erased all of the gains since August of last year. So all of that work that was done in the market has been erased principally in about 6, 8 weeks. But a ton of that was done this week. If you're looking at the daily chart over here, just a massive down move. Now, we talked, and I've been talking about and warning about the H pattern here, where we also had a bear flag. We can take that bear flag off. We already know it was broken to the downside. But if you look at the H pattern, long leg down, weak volume, tip over here, and back to the neckline, and then a break of that. Now, a lot of times the break of it will be about the same as the original long leg down. We're not quite there. I believe when I did this for members earlier today, this was about 620 points versus like 480 or something this time. So another 120 points or so would put us on exactly this same down move. So again, from here to here was 600 and roughly 640 points, 10.3%. And when we look at from here down to where we were at points during the day today, okay, we're down 440 points on it versus the 640. So about 200 points shy of that 430, 440 points from this thing, and down another, 8% on this thing. So we are down pretty significantly from these highs. From the where we closed today, we're now down 17%. Way past correction territory. We are in that significant, almost recessionary territory. And I don't know if we're done yet. So I took the chance today to close out extra trades. Yeah, it cost me money because those trades were down, but I'm pretty confident in getting that back. But what I wanted to do was I wanted to just clean off things in case we got worse on Monday. I took some extra losses, just cleaned up the trades. I do have a bunch of stuff on in the Lazy Trader account. We still have a pretty good amount of BP invested. I'm heavy into SPY, QQQ. We've got Amazon, Hood, Palantir, and some in Boeing in that account. But heavy SPY and QQQ. We also, I think that's about it. And so we're still pretty heavily invested in there. In the trading account, though, we took the opportunity, like I said, to clean some things out. Yes, we had some things hit stops today. So we actually used our hedges to offset that. All of the put debit spreads from the 112C, I cashed all of those in. And then I just went and closed some trades that were not in trouble just to get out. Some of the SPY leaps, I took them off. They weren't at stops. I took them off. Rolling is the same thing. Again, let me preface this thing and let me actually stop sharing for a minute. Rolling, write this down, is booking a loser and then putting on another trade in an asset that's already declining. So could we have rolled out many of these SPYs? A lot of members were saying, well, why aren't you rolling? It's part of the plan that we can either roll or take assignment or stop. You can have your choice. Well, I'm looking at the charts, which I just showed you. We may not be done going down. Okay, just because the H pattern says we could go down another 220 points doesn't mean that we will or that that's all will go down. We don't have any clue what's going on. I'm not sure But over the weekend, I do not want to have a lot of trades on. If China's coming back with retaliation, who knows what Europe is going to come back with, and India, and all these other countries. We know, Mexico is going to be coming out with something. Canada's already chosen to retaliate. I'm seeing it in businesses. Uh, Here, some of my kids work for some of the larger companies in America, and there's a lot of nervousness going on because a lot of their products are that they sell are coming from overseas, and there's some significant worries about the price increases that they're going to handle, and can they handle this? How much are they going to pass on? Are we going to destroy the demand? It's a lot of unknowns now. I'm again not disagreeing that maybe we should have reciprocal tariffs. I think the calculations that we came up with are bonkers, but anyway, uh, I get it. They have 5%, we do 5%. They have 10%, we do 10%. It's all good. But some of these numbers are crazy that we're seeing out there, and now they're going to retaliate. It's not good for anybody. I get the bargaining power chip. I don't want to be political on the whole thing. I'm all good with the concept. I think the delivery is where we have what's the plan? Where are we at? Rolling these out smartly by dealing with the countries independently may have been better than the hammer, but who knows? What do I know? Okay, I'm just a trader here. So we booked some losses today. The market booked a lot of losses. Watching people get smoked all over the place. If you're thinking the wheel strategy was the greatest thing on planet Earth, okay, do you still think it is? Okay, well, I don't mind getting assigned on, you know, who knows? Uber? Okay. All right. Great. Well, if you didn't mind getting assigned on Uber, you probably did. Okay. Oh, I don't mind getting assigned on ARM. Okay. Well, you probably did. Okay. But you're getting assigned on something that may not be done going down. We're nearing oversold, which is maybe the savior of everything, but that doesn't mean we're bouncing tomorrow. Taiwan Semiconductor. Well, I'm going to wheel this. I'm okay getting assigned. Well, maybe you were getting okay getting assigned at 160, but now your 160 is 146. Okay, so you've now lost a bunch more money. This is why I'm not a gigantic fan of the wheel unless you are doing it in very high quality companies. What's high quality? Well, to me, Amazon, I think, is a high quality company getting murdered by the tariffs. Okay. Nice thing about Amazon is we did finish off the lows of the session today, but we also finished well below the highs of the session today. I think a bounce could be coming here. It's oversold. I don't know how things are going to shake out, but okay, I was okay getting assigned at 200. Okay, or 190. Heck, you're at 170 right now. You've lost another 20% on your accounts. Selling covered calls can certainly help make up for that, but even quality stocks are heading down. And as long as you got enough cash in your account to cover the assignment, okay, great. But if you oversized because you wanted these great little uh, calls, you have a problem. Now, the one thing I am doing here is I cleaned out a bunch of trades. Like I said, the 112s, I only had one stop out today. So I had a naked put stop out and I covered it pretty much with hedges and put debit spreads from the 112C. That was not my problem. What I did get stopped down on today was three strangles, one in ES, one in oil, and one in bonds. There was no safe area to be in today. Everything got smoked. So yet the market's down almost 6% on the session. SPX down 5.9%, almost 6%. IWM down 4%. QQQ down 6.2%, getting just absolutely hammered. Okay, there. And the worst thing is you closed at the lows of the session. And if we take a look at VIX today, VIX popped up. This was the biggest problem. So the sell-offs are one thing. The volatility expansion is another. So we came back up. Now we did not hit these August highs in the 60s up to 65 from that August 5th, but that reverted quickly. Today we finished at the highs on VIX, and I still think there could be more pain to go. Like I said, most of the countries out there haven't responded yet, and I don't think they're going to say, "Oh, let's negotiate." Okay, I think they're all going to respond with, well, we're going to tariff you even more, and back and back and back. Eventually, it's going to get sorted out. Okay, however, we could see some elevated VIX. Will it back off in a couple days or a week or so? Like typically, it does take 2 weeks for VIX to back off significantly. Very likely that maybe in 2 weeks we'll certainly be back maybe in the mid to low 20s. We'll see if that actually happens. But this VIX today, and if we look at VIX throughout the trading session, well, let's take a look at the trading session today on VIX. Huge spike up here to 45. Then we backed off. So right, the worst was around 11 o'clock. And if we look at S&P at the same time, let's look at where we were on this thing. At 11 o'clock, we were at some pretty ugly lows. Then we started to bounce and rally. VIX started to cool off. Everything looked great. If you were zero DTE trading call credit spreads, you killed it right there. Okay. But if you got into call credit spreads here, anywhere in here, and because you thought this thing was going to keep going down, well, it didn't. It reversed and went higher. And if you sold put credit spreads here, I'm sorry, if you sold put credit spreads here after we started to move up, well, then you got beat up on these moves down because it only kept selling. And then we really accelerated at the end of the day down, and the VIX really popped the end of the day, 41 to 45. So a big 10% run at the end of the day. Things don't look great. I'm kind of happy that I cleaned out a lot of stuff in my account. Like I said, I took off trades that weren't even a problem. I took off winners. I took off hedges. I cleaned things down. What I did leave on in it was a lot of naked puts, and I'm okay with either assignment or something on. Still have a lot of ways to go. I'm not too worried about those yet. Could get a lot worse in the investing account. In the trading account, they're shorter term trades. Most of that stuff came off today. Like I said, lost 3 strangles. Yeah, it is what it is. I lost one, 2 naked put, but I made up for that with the hedges we had on. Not too worried. Volatility hedges did not perform as well in this environment as expected because you've got a pretty decent down move, but volatility, while it did spike, it just kind of rose and didn't get to those extreme levels. At the same time, you were getting a sell-off over a couple of days. So the things that we put on to maybe prevent August 5th didn't work out because this is a different event. This is more like COVID. Okay. This is not you know, if you want to call it a black swan event, maybe you can, but uh, this is not like the quick hit crazy thing. One thing happened and reverted it, back to normal pretty doggone quickly. This is more like COVID. I don't think this is getting resolved for a little bit. And if it pushes the country into recession, we'll see unemployment rate did tick up today. I'm not trying to paint this completely negative picture. We'll keep doing our trades, but I did actually add a trade today. I added more long leaps in SPY that I'm doing poor man covered calls on. Those have held up extremely well. I'm only down not even half of what the market is down from its all-time highs because I'm writing at the money covered calls. They've paid off tremendously in this environment, and I'm loving that trade. So we'll continue to do the income poor man's covered call. I did also write calls today at the close, but I did write them up a ways. I normally don't write significantly out of the money, but the VIX at 45 was paying me so much extrinsic in case we bounce Monday. They'll be great. If we don't bounce Monday, I'm going to make even more money and I'm not in trouble. I've got plenty of time on these leaps. I've got a whole nother year for the market to rebound, and I'm going to keep generating cash flow. And I'm generating about 1,500 bucks a day. And what is the margin I'm using on these? See if I can pull it up. You'd think, yeah, should be ready, Tom. How come you're not ready with this stuff? Trade tracker, let's get it open. And I'm using about $20,000 right now in buying power for that, generating 1,500 bucks a week. on that. So if you do some math, okay, 20,000 divided by $1,500 a week, it's going to pay me about 13% a week or so on these. And even if I'm not worried about the gains, I'm offsetting losses, I'm paying these down. I should be able to start to pay these things down pretty well over time. The only problem it would be is if the markets hit that 450, 430 level, then we'll start to pay a little bit more attention on that. But that's 100 points down from here, 20% more. It doesn't mean we can't get there, but that would be a 40% decline this year. It's possible. I'm not saying the bottom's in. I'm not saying we go down further, but I think you have to put the odds in your favor that I'm watching people on YouTube. I've been warning you about the H pattern. We've been talking about charts. Nothing good happens below the 200-day moving average here. So nothing great is happening here. And when I look at some of the news feeds uh, that I see, there is, you know, selling covered calls on MicroStrategy and making 25, retire on 150,000. Really? Okay. Well, your $150,000 is now 120,000. So I don't know if you're retiring tomorrow on that. And then, number one strategy, do this, make 10% a week. 10% a week is craziness. Uh, mar- you know, get long what I'm buying now. What do you mean what you're buying now? Okay. Why buy? I think you need to wait. One of them says buy now. Three stocks to make you a millionaire. Okay. Three stocks to make you money. Five stocks that'll do this. Buy these. Who the heck is telling you to buy? Okay. Why don't you just chill a bit and let this thing play out and be smart? I don't think you need to keep going hog wild on these things on the way down. So, all right. So there you go. There's the markets. We'll see what happens. Yeah, we're down a couple days ago. We were up decently on the year. We'll probably be down a bit now, but yeah, realized is down a bit. But our 112 trades actually positive on the year. What we are down on right now is our strangles are down and our spec trades are down a bit. So it is what it is. Uh, these markets aren't fun for anybody. It's hard to trade right now, but you stick to your plan, you lose some money. I love all the people that, hey, your account's down 15% or something. Okay. Yeah, my account is down right now. My net lick is absolutely down, but the markets have dropped 17% on the year. Okay. I'm okay with it. We'll be fine. It's not the first time that the markets have gone down, and it's not the first time in 30 some years that I've had drawdowns. It's all good. We go back up. Okay. But I love the way my account's set up right now. We'll keep making money. We'll keep doing well. Hope everybody stays safe out there. Just wanted to get something out to you today, heading into the weekend. Still be safe, be smart on what you're doing. Like I said, the 112 doing great. That trade held up extremely well. So pleased with that. We took some losses on some strangles and some spec trades. Yeah, we'll get those back. But we'll continue to do what we're doing. Our poor man's covered calls working out absolutely fantastic. So on that note, we'll let you guys go. Enjoy a great weekend and be smart out there. We'll see what happens on Monday. Bye-bye.